Gabriel, I wanted to ask you about the Chinese market primarily, as that's an area that obviously is a lot of suppliers have found difficult to ship to, particularly in 2020. And it's sort of a market that you can offer some good insight into, I think.
Well, the Chinese market for Ecuador has been extremely important over the past 8 or 10 years, driving the growth in Ecuador's production with their demand. So it is a very important market for us. In 2020, when they started to do COVID checks in the cardboards and in the containers, they definitely affected and scared a lot of exporters and importers. The exporters on the one side in Ecuador have to think twice before sending a container that has been fully disinfected and sprayed and gone through a lot of process, which was put in place by them in a joint effort with the local authorities in Ecuador, plus the private companies, the exporters. And they all went through a very thorough process of reaching an agreement on what was the proper protocols. But even then, nothing guarantees that you don't find COVID on a box, because it's not live COVID that they're finding. It's not something you touch and you put in your face and you get COVID from. It's the strains or DNA from COVID. So I mean, if it was there sometime, it might still be there, even though you sprayed it and it's not alive and it's dead and it's not useful, whatever it is. So this caused a contraction on the, I want to say, on people's confidence to export to China. So when the Chinese importers came to us after Chinese New Year purchases in November of 2020, which was, again, they wanted the shrimp and they paid a higher price, and we exported a lot of volume towards them. We had been preparing to shift our volumes elsewhere. We had been preparing all of 2020. After March, we prepared to shift our volumes to P&D products, to retail in Europe, retail in the States, to headless products. We tried everything to steer away from China because of our dependency from them and the fact that they were going up and down in their demand. That fluctuation cost us internal problems and prices. So towards the end of the year, they had a good sourcing from us, a good season purchasing in November from us for their head-on Chinese New Year consumption. And in December, when they came back to us and said, well, listen, we want your shrimp, but we can't pay that new price that you guys have. Why do you have a higher price? Well, we had a higher price because now we had and were supplying different markets. And in January and December, we had a completely new redistribution of our shrimp market, completely new in January. Now, that changes over the past 4 months. From January until April 2021, it has changed because in January, Ecuador only had 100 million pounds of shrimp in the month. So out of that 100 million pounds, Ecuador had 34 or 30 sent to the US, 30 or 34 sent to Europe, and there was another 35 left, of which 10 million went to Thailand, who was buying to reprocess shrimp. So 10 million was sent there, and then that left only 20 million for the Chinese market, right? So all of these other markets that were very interesting decreased the supply availability for the Chinese market. And once the Chinese importers saw that it wasn't a 1 month deal, that it was a trend, that they were being left to the last option, meaning if I have 3 buyers, I will first listen to whatever Europe and USA is saying or asking me for my product. And once they cannot take the product form that I have, or once I am done with that capacity for peeling, then I can go back to China and say, listen, China, okay, I have these containers, but this is the price. This is the price I've been selling at. And it took them a while to get on board to the price increase. They've been scared away from price increasing because they've been burnt in the past heavily. In 2019, they bought a lot of product in November, and in February, the market crashed, and the prices went down, and importers lost $1 a kilo or $1.50 a kilo. So they're very, very conscious about the price increases. So they were very afraid of paying into and buying into this new price increase, while USA and Europe needed the shrimp because their retail had grown, their food service was reopening, is still on the way to reopen, and they were needing shrimp because we have they have problems in India, they have problems. Everybody has problems all over the world with logistics and delivering containers on time, even though exports are up. Imports, in the States are up. It's because the consumption has clearly gone up. So when the Chinese realized that we had other options, and we had found these other options to be suitable for us, and had adjusted our facilities to produce these products that we weren't producing in the past, they had to pay a higher price to increase. And since January, where they were started very low, until now, they have increased from 20% of our export market to now about 45, 48% of our export market. So again, China is back on the map for Ecuador. Why is it back on the map from 20 to 48? Because Ecuador went from 100 million pounds a month to 167 million pounds a month last month. So when you increase from 100 to 167 million, that's 67 million extra pounds that we can't peel. So we have to pack it and head on and ship to China. So that's basically why we are going back to that dependency, is because the volume produced in that month forced us to get back into China. And now China wants the product because they clearly have been short from receiving product from us for 4 or 5 months. So they want the product right now. They need it. The importers are hungry for product, and they're fighting the prices against the prices from Europe and the United States.
Sure. And to quickly bring in one of the questions we've had from our audience, do you have a sense over the next year or two, will China be looking to Ecuador to fulfill its kind of import demand, or do they look elsewhere as well, depending on other supply pictures?
Well, I think that for Chinese authorities and for Chinese importers, the first thing they're looking for is kind of COVID numbers. It is very important to them. They don't want to import anything COVID. They've made a whole sensationalism, I don't know if that's the proper word, about how we don't want COVID to come in on packaging, either from salmon, from chicken, from beef. We don't want COVID to come in here, right? So if they've already done that part, they can't turn around and say, I'll buy from whoever has it. They have to narrow it down a little more and say, okay, I'm buying from Ecuador, but there are these checks in place. I'll buy from India, but there will be these checks in place. And in the past few weeks, we've seen several notifications of containers found with COVID traces or something. And there's a new plan in place where they suspend people. To the end of the line, they will be searching for seafood everywhere in the world, but they will also be defending their own seafood production during the time that they have it. So this is the moment where they start to produce. Of course, it's not enough what they produce, and they know they need the imports. They will continue to look for it for sure, It's just they have to, if they want to continue to look for it and become a number one on anybody else's mind, they have to loosen up a little on their restrictions. They're frightening people away from selling to China.
And
Now, on that note, everybody talks about these shortfalls in India, and I agree. I mean, there has to be something happening. We hear the news on the factories, we hear the news on the logistics side of it, but then we see the import numbers in the States, and they're up, and they're up from last year to this year. So
yeah, but I think the key there is that this huge ramp up in COVID is very recent in India. We're only talking 45 days, right?
Yeah.
So
yeah.
I mean, like we were back, I don't know, 4 months ago, 5 months ago, India was where they were patting themselves on the back, saying, "Look, we beat COVID with just by whatever we did," and then they realized they hadn't. So I think we've not yet seen the impact of the COVID situation in India now, and that's going to be hitting the supply chain or the lack of product going into the supply chain going forward, rather than I think it's too early to see the impact.
And as the US data is also import is a bit also delayed, like 1-2 months, so
correct.
that's why you cannot see it yet.
There was a month last year, and this is just off the top of my head. There was a month last year where India went down from 70 million to 20 million in exports to the USA. And I don't know if it was June or July. It was right on the summer where they were down drastically because they were going through their first wave of COVID. So with that, what I mean is, even though they may slow down, they may still be above last year's numbers, because that was a deep dive last year from 70 million to 25 million, I think it was. And I'm just recalling numbers from my head. So even if they ship 30 million this year, they'll still be up 2-3% from last year, but it'll be vastly short for what the market needs and depends from them.
And Gabriel, have you seen any kind of inquiries around the Seaspiracy thing make their way to Ecuador?
Not really. In Ecuador, we were pretty much left alone with Seaspiracy. It wasn't focused on Ecuador at all. And yes, there's always been bad press through all aquaculture and trying to downplay aquaculture's efforts for sustainability. But I think that over the last years, I think that our efforts in sustainability and traceability have passed beyond and have proven that everybody's interested in a sustainable future. So I don't think I didn't even hear it here. It was a big news 1 week because there was 3 articles that kind of were passed around, but I had no customers say, "Hey, are you guys into this? Have you heard this? Is there something going on?" Nothing other than a few letters of people actually fighting back against it, saying, "Hey, this was an unfair projection of what the business is."
Finally, Gabriel, how do Ecuador's markets look kind of for the turn of the year 21-22?
Well, I think that, I mean, it follows what everybody is saying. Ecuador is having a very strong demand from Europe, from USA, from China at the moment, and I think that's going to continue until the pipelines get full, and that doesn't seem to be anywhere near. And if we take kind of summary of what we've been hearing, I think importers are afraid of what could still happen in the next few weeks, from India's shipments being late, from the logistics from all over the world, not only India, but from all over the world being late. So that will keep everybody on their toes and looking for product. And we are right in the middle of the world, so it's kind of the first place people call. It was the last place people called in the past because they knew that we were only doing head-on. and we only had headless and value added for the leftovers. But that changed over 2020. Ecuador kind of proved a little bit that, hey, we want to do this, we want to give it a try, and we gave it a good hit. I mean, we've increased our value added production by over 50%. We went from 200 million to 300 million pounds towards the end of this year in peeled production, and that's only the beginning. I mean, people are doing heavy investments here to widen and be able to peel more product and reach those markets that we preferred not to reach because of the way we grew. We grew into China with China's demand, and their product was head on. So we grew that portion of the factory, and we didn't grow the other portion of the factory. With today's recent events and last year's events, it pushed us towards something that we've been talking about for 8 years. That we needed to change the product form in Ecuador. We needed to be more versatile for when that moment came that China didn't want to buy from us. It's not that China doesn't want to buy from us right now. They want to, but now that we can peel and do the other products that COVID pushed us to do, right? Because during certain months, COVID had affected China to the point where their importing was almost shut down. They were decreasing their imports. They had inventories. They just weren't consuming it. So all of that changed our product form. That's what's giving us a better future in this market. Otherwise, we wouldn't even be feeling this ramp up or need for production from the States or from Europe, because we wouldn't have that product. We being the same shrimp, it's still, we can sell head on. We could sell head on in the past. If we were offering head on today, people wouldn't be taking it. That's not what people want and need right now. So the fact that we changed in the process of changing is what's making it interesting for Ecuador.
Sure.
And on a positive note, Ecuador, the export numbers from Ecuador you mentioned were up about 10%, 9.8% the export numbers in one of the initial presentations, and that's true for the export data. But for actual production data, we are a little over 18% above what we were, production versus production data from last year, and that's simply because we're peeling more. That's where it is. It sounds like we're exporting 10% more. Yes, it's 10% more exports, but since they are peeled, it's actually 18%, 19% more production. So Ecuador is doing a great job at increasing their production. I mean, it's amazing how the farmers were able to adjust to these new prices of last year, which were terrible, and they had to adjust. So we became better at producing with the costs and more effective.
Yeah.
Sure.
Can I just add one question, if that's okay?
Mm-hmm.
Yeah, sure.
Neil? Yeah. No, I was just wondering because in Ecuador, then you said that indeed, like you are catering to the US and Europe, but then the peeling is much more expensive there, and you have indeed said that you have changed your processing and your system just to cater to these new markets. My question is whether this kind of this catering to the US and Europe will be in the long term sustainable. If, for example, the Chinese demand picks up, is this something that you think that it's actually going to be in the long run uh, quite interesting for Ecuador, or will you go back to China just to supplying there, or how do you think that will play out?
Okay, I'm going to take it as a two-part question, and here's my take on this. The first part was the labor cost, and the
Yeah.
second part is we will go back to China if of course the price doesn't work for us based on that labor cost. So the first part is the labor cost. The actual labor cost in a pound of peeled product that reaches the market out of the final $6, $5 per pound price is in Ecuador, the actual hand labor is about, I'd say, 25 to 30 cents.
Mhm.
And maybe it's half or a little less than half in Asia, in some parts in Asia, not in all of them.
Yeah.
So if we have 25 and they have half, that's, let's say, 12.5, to say there's a 12-cent difference per pound in the final product. That's the margin we're talking about. So that's not something that breaks a deal, especially when markets are short. When markets are short, there's nothing that breaks the deal. You mentioned it in your presentation. People want reliability before lack of supply.
Yeah.
So in that scenario, you forget about even the 12 cents. But in a normal scenario, are we willing to sacrifice the 12 cents? I think that yes. I think that we, in the current situation, with all the current restrictions that there are in China, we will sacrifice those 12 cents any day, because it's much more difficult to send a container 45 days over the ocean, go reach China, and then China saying, "Oh no, we found traces of COVID, or somebody coughed on this,"
They'll send it back.
or they look around, "Hey, I don't know, I don't like this."
Yeah.
Well,
May I chime in for a moment too?
I'm sorry.
May I say something?
Yep.
I think we're going to see 2021 as a watershed year for what we're talking about. We've been talking with Ecuador for 15 years about getting mechanized, getting into the marketplace that Vietnam and then India kind of took, Thailand originally.
Mhm.
What we're seeing right now, and we're very involved in this, is I'm shopping for a lot of equipment right now. We've gone from the skepticism, and more or less everybody in Ecuador that I dealt with saying, yeah, we need to do this, we need to address that market, we're going to do it soon. This year, with what happened in China, has opened the eyes and said, you know, Ecuador's looking at it now and saying, there's no reason we can't have a big piece of this steady market, not the market that goes up and down, but the program business market, the supermarket business.
Yeah.
So I think we're going to see that 12 cents, first of all, is negligible, and I think it's going to go away. And the second part of that is, once the investment is made, and we're not just talking about shifting from hand peeling to going back to head on, once the investment is made, the equipment's in place, people are going to run those plants. They're going to run that equipment.
Absolutely.
Yeah.
Absolutely. And that would put us in a position where we haven't been ever as a supplier for a program business. And then that brings to a point of, sometimes, and it was mentioned here, that there was a point in the year where Ecuador's prices were so low that everybody wanted to buy from Ecuador, and we increased our participation in Europe because our prices were so low. They were so low because we're not doing the program business. They were so low because in the program, we're selling the next 2 weeks of product. We're not selling July.
Right.
Mm.
India's trying to sell August. That's the program business. That's the mentality we need to get into as Ecuadorians. We need to supply a constant program of X amount of pounds out of our total production need to be on a fixed program. That way, the amount of product on the daily, I want to say stock market price, or on the daily, what's the word is,
Spot market.
the spot market. That's what I wanted to say. The spot market price, that needs to be decreased. If there's less spot product available, there's less fluctuation, and everybody needs less fluctuation because we need this to be as stable as it can be. Of course, always supply and demand will bring it up and down, but spot market brings it spiking up and then it drops it immediately. And then when everybody loses money, everybody's upside down with their inventory. They bought what they didn't need, right? But if we get a large percentage of our production out of the spot market, this will be a nicer playing field for everyone.
And it hasn't been lost on the Ecuadorians that over the last year, People like me have bought hundreds of containers
Yeah.
of very inexpensive Ecuador shrimp and sent them to China and Vietnam to be peeled. This is not lost on them. They're seeing
No.
it now.
Absolutely. And it still continue to happen. It happens now. It's happening right now with even these prices, which are much higher than before. It's still happening that shrimp is being sent to be peeled to shrimp plants in China. Out of that percentage of shrimp that goes to China, in the past, it was 97, 98% head on. And now it's borderline 85. It's 85, 80, 87. There's a lot of that shrimp that is headless shrimp that's going to be reprocessed either for local consumption or their exports, whatever it is they're using it for, I'm not sure, but it goes to their plants because the plants are the ones demanding it. So it's definitely a change and something that we are noticing and that we need to change. So rather than sending our product over there, and that does away with that 12 cents we were speaking of before.
Yeah.